So here's the short-term view of the stock market, and we're going to use the S&P 500 SPX. So we'll go to that S&P 500, and you can see in our analysis right over here the consistent cyclical patterns. Now we put in a higher track in here if the stock market could prove the strength that it could get through those resistance levels. So I'll zoom in there in a second, but I want you to see a positive cycle, slightly positive cycle, positive cycle, positive cycle, all of those. And it's still positive right over here, but the NASDAQ is not. And that's where I'm looking at, which is significantly different. I'll show you that NASDAQ in a second just so that you can see. This upward momentum is still intact, but it failed at those key resistance levels that you could see right over here and has begun to move down. And with the NASDAQ turning weaker, this is where I gave this something like a 30% probability and this about a 60% probability and a lower track about a 10% probability. Now this probably falls to 10%. This is more like about 70 to 80% and maybe 10 to 20% on the lower or sharper track that I don't have in here right now. So no matter what, it looks to us like any rallies in here are failures coming up. This you could see is the minor cycle, which is due to bottom in a couple days. So what we're looking for is a little bottom in here, an attempted rally, and then another big wave down. And then after that, this cycle comes into play right over here, which bottoms around the end of August, beginning of September. So there you go with the lineup of lows that we suggested in the NASDAQ stocks, those big leaders that we think are going to fall towards the end of August. And the big decline risk is over here in that next cycle that you don't even see. So no breakdown in here yet. But when I show you the NASDAQ, you're going to see something different. The breakdown level in here would be 3127.66 right over there, which may only be a few days away if this downside continues as it is. We'll have to see good news come out and the market not respond to it. Well, we're getting some of that in earnings. Let's take a look here quickly, and I rarely do this, is bring up the NASDAQ right in here. Because I want you to see the breakdown and see the difference. So the NASDAQ breakdown level was 10,370 right in here. It has broken down already, though it's over it now by a little bit, trying to hold on. Momentum is not yet giving way, but we expect to have that soon. And this breakdown ends 1, 2, 3, 4 positive cycles, a double top formed in here, and now rolling over in a breakdown, just like the rest of the market. We're projecting down over here to about 10,000, though it's pretty reasonable to reproject it down here to about 9,400, and that could be in this cycle out over here. That cycle right there points to a bottom around the very end of August or beginning of September. So you could see all of the alignments as we have synchronicity between those major stocks and the stock market as a whole. So what we're looking for the SPX for this next week is this kind of a further decline for a couple days in this minor cycle, an attempted rally, which will give us a sell. And you can see this minor support right over there is around 31.88. Well, that's pretty likely. This is 31.73. So we're probably going to get down into that area, give you some kind of a bounce, and then the risks really pick up after that. So we think that higher track is very, very unlikely at this point. Some of the evidence shows us momentum still positive. NASDAQ weakening, NASDAQ having broken down already. The breakdown in the key leaders shows a trouble because they're not going to be lifting the market anymore, and I don't think the market can resist that kind of condition. We're going to call this a topped market. Sell rallies, I think the switch has been flipped, and as I said in the beginning of the show, reality is hitting home as far as valuations go in the stock market. I think trouble is out there ahead, The market's going to have to prove that and give up these momentums and give up these support zones. It's like I'm getting emails from people. Well, your indicators are bullish, so why are you bearish? Well, I am, for the very near term because of the highest probabilities based on these core cycle patterns that we look at, and I believe that those are going to lead the indicators, and then the indicators, which tend to be concurrent, will give that up, and we'll see the declines. The market's going to have to prove that. We're just barely getting the breakdowns right now. So I want to get ahead of it and really let you know that I think there is trouble ahead for this stock market.